Hi everyone, this is the next of our Allica Brokercasts, where we've decided to take a look at the care home market. As you'll know, it's a relatively new market for us. We formally launched a couple of months ago, but fair to say we've been blown away by the scale of the opportunity, which we believe was there to fund these businesses for our broker partners. The market is one we know well, includes many dedicated specialists, healthcare brokers, but I think it's fair to say there's plenty of brokers too who perhaps only occasionally see these types of opportunities, which is why we thought this session would be a useful one. So, like all commercial sectors, these care home opportunities come with their own nuances and some quirks. And that's just one of the many reasons why we created Allica Bank, a new specialist and dedicated team to support both specialist brokers and those perhaps who are less familiar with the sector. And we've done that even whilst many of the more established lenders in the market have retreated at pace. The goal as ever in us supporting these businesses is being able to support more SMEs, more of our broker partners. So our goal today is a simple one. It's a swift whistle-stop Brokercast on this market and what brokers really should know when working in the sector, and of course how we can help. So delighted to be joined by Anthony, who joined us recently to spearhead our move into the sector. Anthony, in your view, why are we seeing more and more brokers moving into this sector?
I think brokers and by nature their clients are increasingly seeing more opportunities in the care market, and especially over the past sort of 18 months. I think the market benefits from strong demands. You've got an aging population, people are living longer, and also the fact with more recent events that it's actually a sector that's fared better than others during COVID. I think these demands combined with the shortfall of care beds and operators, which is increasing the need for new entrants to come in. And then obviously more recently we've seen, COVID has caused a lot of operators that were looking to sell or retire to hold off, but they are now looking to exit, which is creating that big boost in sort of transactional activity, which I think brokers are wanting to get involved in. We're also seeing a number of brokers approaching us with care deals who have no experience with the care home sector. They're just keen to understand more about the sector. They have perhaps long-standing clients that are looking to transition into care, and they are just wanting to be able to better understand that sector and identify those opportunities for those long-standing relationships.
Okay, so with the opportunities that we're seeing from our broker partners, what in your experiences are some of the main differences brokers should be aware of? So I guess, what should they be aware of versus a typical commercial mortgage transaction?
Yeah, I think care deals can have a lot more sort of nuanced nature to them. They have a lot more things to consider than just your sort of your LTV and your EBITDA numbers and leverage, etc. I think a number of areas which brokers should be aware of when they're looking at care home transactions, and which lender to approach. So the first one I would say would be sort of your asset type. Are you looking at a purpose-built care home or a conversion? Some banks will only look at purpose-built care homes. High street banks, etc., are leaning more towards your larger purpose-builts. Bed numbers. Some banks, again, typically more high street, will look at 40 to 50 beds as a sort of minimum. You've got other sort of challenger banks that may look at 30. We're able to personally look at homes with a minimum number of 20 beds. Minimum number of homes. Some lenders, again, will require a minimum of 2 to 3 homes as part of a group. They want to try and spread the risk. And others, such as us, will also look at single home acquisitions. I think a key area is the regulatory side of things. So the majority of lenders in that market will look for a Care Quality Commission, who's the regulatory body for care homes, a minimum rating of good for the target home, with only really specialist lenders, non-bank lenders, looking at RIs with a much sort of higher margin attached. I think probably the key area of difference between perhaps a standard commercial mortgage and care home lending is that increasingly lenders will look at serviceability not from an EBITDA perspective, but from a cash flow available for debt service perspective. And so that is something that's probably key to understanding, because you do get some transactions where EBITDA is fantastic or is good enough, but they're unable to service it because their working capital movements are really high, and it's just getting behind those numbers and really understanding what is the cash position of that to service the debt. Experience of the operator is key. Some lenders will have limited to no appetite for first-time buyers, especially where they have no care experience. However, we try to look at the scenario as a whole. So we have just lent to a first-time buyer a commercial mortgage of $700,000 to acquire his first care home. He's non-care based, so his finance background has a strong business acumen, but the benefits are that he has a highly experienced team at the home, registered managers and staff, and also a support network of care operators that he knows who can help him when he needs it. And then last, I think, something to identify is the management team. You want a strong management team in place. You want to be, a registered manager and permanent staff. You want low levels of agency, and that's going to be critical to all sort of lenders out there. So I think it's, in summary, compared to a commercial mortgage, I think there's just a few more areas that you will need to tick those boxes in terms of to try and get comfortable with and understand actually who you should be targeting as a lender for.
And it sounds like one of the keys there is a different approach on understanding the underlying cash flow of the business. What can we do as a lender actively targeting these opportunities to support brokers through that if it's something they're not used to?
Yeah, I mean, it's something that we get all the time. You might find lenders that are specifically ones that aren't necessarily doing care day in, day out. They may not really understand the basics around getting to the CFADs, etc. So we're always happy to support those lenders in trying to understand where they are, where the asset is. We get a number of inquiries in, and they want to know more about it. So I've, picked up the phone and done educational pieces with them, and around what we look for. Putting it down to the basics, what we always say is, would you want to put a loved one into that care home, and does it stack up financially?
Sure. So it sounds like another one where teamwork's the key in order to shape a proposal, and to use your example of the first-time buyer, shape a proposal that perhaps the rest of the market would be unable to support.
Yeah, completely.
Great. Okay, thank you. So talk to me about some of the other trends. So trends you think brokers need to be aware of as they start to look at this sector in earnest.
Yeah, I think so. I'd say the most sort of prominent trends at the moment, first one, it has to be COVID. We see a lot of what converse, I guess, to the rest of the market, where you're seeing a lot of businesses have been really hit quite badly, and you do see that within care, where occupancy has fallen, etc. But you tend to see that the financial performance of the homes in the most recent year has actually been very good, and perhaps an outlier compared to prior years. And that can be from the level of grant income they've received versus really the costs they've incurred over that period. Lenders will want to see effectively a sort of netting off of costs to grant income.
A normalised picture.
Exactly. You want to see a true EBITDA position for the business. We are seeing ones where they might have had a 50% uplift, and that could be down to they've improved occupancy and they've improved fees, but they're realistically they're going to be potentially a position there where they've received an added benefit which lenders wouldn't want to lend to, and it really is critical for brokers to be able to understand, is that the true position? And it would be really great. I think a lot of lenders will have that same sort of sensitization to EBITDA, so it's something to really watch out for. Staffing is a constant challenge within the sector, and I think it's
more in the news today, Anthony, as well, about vaccinations.
Indeed, yeah. So they've extended the no jab, no job position until spring next year, but there are currently around 60,000 care home staff that are unvaccinated and will potentially be leaving the industry, where it has, there is such a demand for permanent care staff. So I think it is something that needs to be identified in proposals. Does this home that they're putting forward to a lender, does it have low turnover of staff? Are the staff vaccinated? Is the agency low? These kind of things are really key drivers to making sure that that business is sustainable going forward. And
Sure.
also with national living wage coming through as well, that the business is still going to be able to maintain similar margins that they've been
Yeah.
achieving.
Yeah.
Shelf life of the asset, I think, is a real key one. Some older care assets have been really well maintained and they've been invested in, whilst others are perhaps probably reaching the end of their life without significant investment. I think the questions the brokers need to ask is it good quality? Are the room sizes sufficient? Does it
Yeah.
have things like a lift? Is it essentially future proofing itself to a degree? And yeah, and then I would say also key to understanding, like, especially with an older asset, is what are the demands in the area? What's the competition like from other homes? Have we got a new purpose-built home being built next door? Are there new entrants coming into your local area that could play a risk for these operators or your clients that you're proposing for?
Great. Okay. Thanks for that. So tell us then, what tempted you to join Allica?
So I've worked for high street banks all my banking career. So I was previously with
We're
AI.
sorry about. We're sorry you had to go through that.
Thank you. Yeah, we were previously with AIB, and then before that was with RBS and Coots. I think high street banks they are burdened by their size, and the established process that they have with, it is a slower decision making beast, and often it's, despite what they try to say, it can be a very inward focused business that's very risk conscious rather than actually trying to service the clients the best they can. Risk is obviously an important thing, but it can very much take a back seat within a lot of larger institutions. I think moving to Alka, it's just been, I've had a real sense of being able to add value straight away with the healthcare market. It's been fantastic to be able to support SME care businesses with their growth ambitions, and actually being able to support new entrants into the market. It's such a vital sector, so being able to support them is really rewarding. I think also it's just been great how quickly we've been able to adapt to the demands within both from our brokers and their customers. We've been able to quickly change policy to adapt to meet their needs, and it's been really well received. And I would also say it's been really great to work with underwriters that are actually, passionate to lend
Yeah.
and passionate to support this sector. In high street banks, does tend to be like it's fighting a battle, whereas here there is just a genuine desire to
Open
find a,
door.
a solution to help support those customers.
Yeah. Open door policy. I think that's the key, isn't it? Okay. Just to finish up, and I didn't, or we didn't prepare on this question, but just give me like your 3, 6, 9 month outlook for the care home market in particular before we wrap up.
So I think for us, in terms of the market itself, or in terms of Alka
Yeah.
in the market.
Let's do
So I,
both.
I
Let's
think it would
do
be an
both.
interest. Yeah, okay. Well, I think in terms of the care market, 3, 6 month, 9 month outlook it's going to be an interesting one. I think the winter will be potentially challenging. So I think things to look out for will be how the country handles COVID over the winter months. I think we won't see as significant an impact as we did last year because of the levels of vaccinations that have occurred and the really, effective infection control management that the majority of homes have really installed into place, and it's become sort of old hat now. Next 6 months, I think you'll see the challenges around the no jab, no job. But equally, I think it's also important to bring out the fact that we're going to see a lot of opportunities and a lot of stuff that's coming into the market. We've had a lot, I would say a lot of deals that have been, or proposals that have come in for us, have been ones where there have been people who have been wanting to retire, probably wanted to retire tail end of 2019, beginning of 2020, held it all off because of COVID, and it has just meant there is a lot of opportunities coming into the market for brokers. And obviously this sector has shown such demand, and it's really brought it into the spotlight more, the whole COVID and all of the potential challenges, I suppose, around the sector, but it has shown those opportunities, and we've had a lot of interested new entrants coming in.
So presumably, if transactional activities rising, would we also expect more opportunity for brokers in terms of operators with growth plans, perhaps
100%.
reviewing where they're banked
Yeah.
and looking to make those acquisitions.
I would say there's very few operators out there now that have, say, one asset or two assets and are just willing to leave it at that. Most have a very much a growth trajectory in place. They want to acquire, not ridiculously, but they are looking to acquire when they can find good opportunities, and this is a great time for those opportunities, for our brokers to be able to leverage off. And I think that is why we're seeing that interest from the brokers out there that maybe don't have a care background.
Okay, and for Alka, same time period in terms of healthcare.
Just we want to get out there and do as much as we can within elderly care. I think we've got a fantastic pipeline built up, and we can only want to enhance that even more and support our broker networks. We're constantly listening to the feedback from our brokers on where we sit in terms, and it's been great to get that really positive feedback from them, on the fact that there hasn't been that support from lenders. With high streets pulling out, and people, banks and financial institutions burdened with the COVID C-bills, etc. It's just been great that they've been so warm to us coming into the market, and it shows them that they've got real demand there, and they need lenders out there that are willing to support these deals.
Great. Okay. Thanks for your time. Sounds like there's plenty of exciting things happening in the market and at Allica as well. Thanks to our broker partners for all they've done to support our launch into this market. And keep an eye, because there's more exciting things coming down the tracks. Thank you.